With the commodity supercycle in full swing, cobalt prices have more than doubled in a year, passing $32 per pound last week. This incredible growth is largely due to increasing demand in the Asian economies. China's share of world cobalt consumption alone has increased from 3% in 1997 to 20% in 2006. Welcome to TFN's Smart Trading Action Alert. I'm Laura Cadden. In the U.S., long-term customers are expected to purchase up to 50% more cobalt this year than in years past. Inventories are low around the world. With consumption currently at 65,000 tons, the deficit is estimated to be as much as 5,000 tons. Some sources suggest inventories could be the equivalent of just a few days' supply. Joining us today is Andrew Mickey, Senior Investment Strategist of Breakaway Investor, Level 6 Trader, and a new research service called Small Cap Commodity Prospector. Welcome, Andrew.
Thanks for having me, Laura.
My pleasure. Given this tight physical market, I've heard traders suggest that prices for cobalt could go up to $100 per pound next year. Could you describe for our viewers why it would be that the demand is so incredible right now?
Well, the demand side of cobalt is growing like wildfire because cobalt is in super alloys, which is used in jet engines and every kind of spacecraft we have, but cobalt's also used in hybrid car batteries as well as in batteries for cell phones, PDAs, laptops. Any portable electronic device has some amount of cobalt in it. And as demand for those products rise, we just see a lockstep demand for cobalt increase as well.
And it also has industrial uses, correct? Because it resists a high level of temperature?
Yes, cobalt is has one of the highest heat-resistant metals around.
So it sounds like any company that can give a steady supply of cobalt has a huge potential right now.
That's correct. But the most exciting part really isn't on the supply side, it is on the demand side. And we're actually seeing supplies decrease. The top cobalt producer in the world, Norsk Nickel, may be actually seeing their ability to produce more cobalt decline, and that's where the exciting side is. We're definitely seeing surging demand from all those products. However, the supply side is getting very interesting.
Now, speaking of Norsk Nickel, last year they bought out U.S.-based group
OMG, correct.
Groups. Substantial, they have nickel and cobalt interests. Now, they already control 20% of the world's supply. What are the Russians up to?
Well, you see, in the ground, nickel comes with cobalt. You can't pull one out without the other. And it just, in different geological testing we see, there's just different levels of cobalt with the nickel. And what the Russians are up to by purchasing OMG is creating a nickel powerhouse. As a result, they're becoming even a more increased cobalt powerhouse and controlling more of the world's supply of nickel. And what they're up to is they're essentially just pushing prices up. About a year ago in February, they released a press release announcing they expected prices to rise from $11, which they were trading at which was what a pound of cobalt cost a year ago, to $30 today. And look what happened. A pound of cobalt is selling for $30 today. They control the prices, they control the market. The Russians will be pushing it higher just because it puts more money in their coffers.
So, well, since 1993, cobalt prices in the U.S. were kept in check by a U.S. government stockpile. Now this source is entirely depleted and there's no new inventory to pull from. Where is the new production going to come from, and what do you think it's going to do to the prices?
Well, cobalt prices are headed higher. It's the supply-demand equation with demand rising and supply falling. We're already in a deficit, and the only way we can get new supplies of cobalt is through cobalt recycling, which isn't very efficient and isn't very helpful. And in the U.S., cobalt is classified as a strategic material, which means it's absolutely essential for national defense. And that comes back into the aircraft engines and superalloys and batteries, which our military relies on battery-powered equipment now, essentially for everything. And as a result, cobalt is in high demand and it's actually required by the U.S. However, there's not a single cobalt-producing mine within U.S. borders. As a result, the government stockpiles tons of cobalt in case, just like we do with the Strategic Petroleum Reserve, in case of war or any strategic need for oil. And that's what we're doing with cobalt right now. But we're not producing any of it on our own.
So in your latest report for your brand new service with Small Cap Commodity Prospector, you call it SCCP, right?
SCCP, yes. Small Cap Commodity Prospectors is a mouthful.
It is. And you've identified a small cap commodity company that you say can provide this breakthrough that we so desperately need. Can you tell us about the company and why you're recommending it?
Well, this company has a great story, but has even better profit potential. And that's a rare combination. You see, back in 1983, the UN was going all through Africa trying to find mineral reserves, just to develop the economies of all the countries in sub-Saharan Africa.
Sure.
And they found a giant nickel reserve in Cameroon. However, nickel prices weren't really high enough at the time to justify turning the mine into producing territory. It just didn't make economic sense. However, 10 years after that, the CEO of the company that I'm recommending for SSCP readers he went into the old UN files and went in nickel, under the nickel file, and found this company. And he said, wait, this isn't a nickel mine, this is a cobalt mine. And nickel prices have been up very high lately, but it's cobalt that this company has going for it. And it has 7 mines. We're on the verge of developing another one this summer. The final feasibility study is being completed. The Cameroon government's on our side. This company actually had to call in a favor from President Bush to ensure that the mine would come online, because the Cameroon government started giving them some hard times. But President Bush did so well for them, they're actually now getting a tax break from the Cameroon government for developing this mine. So things are doing very well for them, and they realistically could be sitting on 100 billion pounds of cobalt and nickel reserves. And it only has a market value of $120 million. And that's the kind of opportunity we're looking at. And that's what we're looking for small cap commodity prospector.
Well, that's the next thing I wanted to ask you about. I know most of our viewers are familiar with you from Level 6 Trader. So we want to hear about your new service. Tell us about SCCP.
Well, Level 6 Trader is doing very well. It's a lot of fun. We have options, fast-moving plays. However, with small cap commodity prospector, we're looking for these supply-demand situations in metals you don't normally read about. Because cobalt's not traded on the London Metals Exchange like nickel, steel, and all these other major ones, including precious metals. And there's limited opportunity there because the markets are very transparent. Cobalt is traded between individual traders, hedge funds, and it's very challenging to get information on it. You really need somebody that has connections within the finance industry and the people that control the cobalt supply and reserves to get an accurate picture of what's going on. And that's what I intend to do with small cap commodity prospector, is give that inside look to find special supply-demand situations and companies like the one I'm currently recommending with just enormous profit potential because they're benefiting from a specific circumstance. In this case, there's supply-demand gap plus international affairs, and that's exactly what I'm looking for.
So this service is going to primarily be focused on micro and small caps. So I'm thinking, are you also going to cap your membership?
Well, that's the frustrating part. As you know, I'm also the editor of Breakaway Investor, and that idea has just really taken hold. We're up past 14,000 subscribers, and I would love to recommend this company to them. I mean, $100 billion worth of cobalt, $120 million market value. I mean, do the math. However, it's just not traded with heavy enough volume to recommend to that many people. One single recommendation or publishing it in a newsletter would easily triple or quadruple the stock price. And that means people's potential gains would realistically be cut in 1/2 or 1/3. And that's really hurting everybody. So I decided to launch Small Cap Commodity Prospector, and we're limiting it to only 500 charter members. And that way we can explore these opportunities that are more aggressive and in the microcap realm. And it's looking to do very well.
I see. Well, thank you so much for your time.
Okay, thanks for having me.
For more information about this tiny commodity stock and Andrew's new service, Small Cap Commodity Prospector, go to www.smallcapcommodity.com. Please tune in next week for another profitable opportunity on TFN's Smart Trading Action Alert. For TaipanFinancialNews.com, I'm Laura Cadden.
Hello, I'm J. Christoph Amberger, president of TaipanFinancialNews.com. My colleague Andrew Mickey has released a special report on the strategic material you've just heard about. I've read it, and I have to admit that this is one of the most compelling papers I've seen in a long time. But see if you agree with me. Simply click anywhere in this video screen to access the report, or cut and paste the link we provide in the body text into your browser. I promise it's worth every second of your time. For TaipanFinancialNews.com, I wish you a profitable week.